U.S. stocks are on the rise today on news that President Trump is delaying his new 50% tariffs on the European Union, and after the EU said it's willing to fast-track trade talks with the U.S. Wall Street also getting a much-needed boost from a new consumer confidence report, which came in higher than economists had expected. CNN's Matt Egan is with us now on this. Tell us about the big takeaways from this consumer confidence report, Matt.
Well, Brianna, Americans are feeling a lot better about the economy after a scary March and April. We saw that consumer confidence in May went up. It went way up. This was better than expected. In fact, this was the biggest one-month increase for consumer confidence in 4 years. And when we look at the trend, you can see that confidence really took a hit at the start of this year. You see this really sharp decline in consumer confidence. This, of course, was happening as the president was ratcheting up tariffs and as the stock market was plunging. In fact, confidence had really gotten to the lowest levels since COVID, which is pretty stunning when you think about it. But now we do see this significant uptick coming as there's been some de-escalation in the trade war. And obviously this historic rebound on Wall Street is also helping to boost confidence. And when we look at the internals of this report, there are a lot of positives here, right? People are feeling a lot better about the current situation. Their short-term outlook went way up. This was the biggest one-month increase for this metric since 2009 during the Great Recession. Also, recession fears, they went down, and this was a widespread shift in sentiment. The Conference Board, which conducts this survey, said that the rebound in confidence was broad-based across all age groups, all income groups. They also say it was shared across all political affiliations with the strongest improvements among Republicans. Now, this is important, of course, politically for the White House and for Republicans in Congress, but economically, this is significant because consumer spending is the biggest driver of the U.S. economy. And so the fact that consumer confidence has rebounded, it's obviously still at relatively low levels, but it's starting to move in the right direction. That is good news. Brianna?
What's driving the big rally on Wall Street, Matt?
Yeah, well, we take a look at the market. You see the Dow, the S&P, and the NASDAQ all solidly higher at 2.4% increase for the NASDAQ. And, you know, this is a familiar playbook, right? Every time we see the president ratchet up tariffs and tariff threats, we see the market drop. And when he walks back those threats, the market rebounds. And we're seeing that happen again. This time, the focus is on the president's threats around EU tariffs. Now, just to remind you where we are there, back in early April, the president said he'd put a 20% tariff on the European Union, America's biggest trading partner. Then when markets freaked out, he walked it back, 90-day delay. Instead, he put this 10% universal tariff on. Then on Friday, the president really startled investors by saying, actually, we're going to do a 50% tariff, and it's going to start on June 1. And then after a positive phone call with officials in the EU over the weekend, the president said that those tariffs are going to be delayed until July 9. Now, when you look at the trend for the market, you see markets have continued to rebound from this really sharp decline earlier this year. This was all driven by trade war fears, all driven by worries about a recession. But now we have this historic rebound with the market really coming back from most of those losses. But it does seem like we're still going to be held hostage in some ways to the ups and downs of the trade war. I talked to market veteran Art Hogan, and he said, look, unfortunately, in this scatterbrained, haphazard delivery of trade war news, this market will be held hostage by every tariff utterance on social media. And so, Brianna, it does seem like at any moment we're basically one Truth Social post away from either a 700-point rebound in the market or a 700-point drop. You just can't look away because the trade war news is coming just so fast.
Fun times. Matt Egan, thank you so much.
Thanks,
Boris?
Brianna.
Let's discuss these fun times with Scott Lincicome. He's the Vice President of General Economics at the Cato Institute. Scott, great to see you as always. So you have the biggest monthly jump in consumer confidence in almost 4 years. The market's rallying on that. You, though, have described it as a stay of execution. Why?
Well, there's a few reasons. The most obvious is that none of the tariffs have really gone away. All of the tariffs that the president has proposed on Liberation Day, the ones that tanked the markets, well, those are simply paused until July. So we could be back right at the same point in just a few weeks. But the other thing is that tariffs actually still remain quite high in historical terms. And we're looking at 15, 16%. And that's higher than any point going back almost a century. And that's going to eventually hit the real economy. You hear producers talk about high raw materials prices, companies, retailers talking about compressed margins, and companies like Walmart saying eventually, once their inventories dwindle down, they're going to have to pass those prices on to consumers. And so really, we can celebrate these walkbacks and these EU deals, but there's a lot of time left to see what we're really going to get for the real economy.
How soon do you think that impact is going to be felt? And what happens if we get to July and these 100+ trade deals with partners all over the world haven't been ironed out? Do you anticipate more delays?
I do. And I think that's one of the things that the markets are responding to is optimism that a lot of this stuff goes away, that we end up with a few tariffs here, a few there, but this big Liberation Day push of tariffs of, at one point for China, over 100%, for Vietnam, almost 50%, and then this new EU threat at 50%, that the markets think those are never going to actually materialize, that a lot of that stuff will just keep getting punted down the road. And there is some good reason to think that the president has continuously shown that he does get a little skittish when markets tank or when the bond market starts having problems. And if that continues, if there's this worry that things are coming back, then again, I think there is good reason to think they'll delay again.
Supporters of the president point to these tariffs as having an immediate impact on getting leverage. And you specifically mentioned China and the 100+% tariff that had been installed and then lowered to 30%. That's been his main target. And the labor market in China has been struggling. There was an estimate that was cited by the New York Times that if tariffs stay at current levels, China could lose 6 million manufacturing jobs. If they go back over 100%, that could reach 9 million. I wonder if you see that as a win for the United States, if that could be used as leverage to force Beijing to start playing by the rules, as the Trump administration says.
Well, it's really difficult because of the Chinese government. They are not nearly as responsive to economic turmoil as is a democracy like the United States. So I think it's a bit of a gamble to say that real economic losses that happen because of this trade war in China really push the Chinese government to negotiate. I mean, look, we've had tariffs on Chinese imports at 25% or higher for years now, going back to about 2018. The Chinese government has not caved. They have not changed any of their problematic economic policies. And so, simply just ratcheting up tariffs more and expecting a different response, I think is extremely risky, especially given the real damage this is also having for the U.S. economy. There are a lot of American businesses out there that are buying things from China that are not national security related, and that suddenly they're facing huge tax bills of thousands or hundreds of thousands of dollars. That's a tough bullet to bite for those companies.
Scott Lincicome, appreciate the analysis. Thanks for joining us.
My pleasure.
We have CNN business editor at large Richard Quest with us now. And Richard, a lot of critical economic data coming out this week that's going to tell us about the impact of the Trump trade war. What are you paying attention to?
I think the consumer confidence numbers are interesting because it's sort of a soft number as such. It gives us an idea of how people are feeling. And as we saw the rowback on China's tariffs, that's a very powerful number, 12.3%. You don't see it bounce around by that much. Now, the problem with this conference board number is it's often as thick as Scotch mist, and it can disappear quite as quickly. It tells us that people are feeling better, but that can always disappear at the whiff of the president deciding that he's going to go back to his tariff policy, which we saw, of course, with Europe. Now he's taken the foot off the neck of Europe for the moment, but for how long, that depends, I guess, on what the Europeans come up with.
And of course, it typically takes years to negotiate a trade deal.
Well,
How likely is... Sorry, go on.
I didn't want to be too mealy-mouthed, Brianna. I always come on here and I sort of say how awful or dreadful or how this is not particularly an encouraging piece of news. But the reality is that you just nailed it. It takes months, if not years, to nail these very complicated treaties when you're talking about non-tariff barriers, market access, ownership rules, just specific amounts of this, that, or the other. And the big fear is that the administration will go for a headline win. They did that with the UK. Yeah, sure, they got a bit of beef and they got a bit of this and they got a bit of that. And it looks like a deal's been done. But underneath, it's all about we will agree in the future. We will negotiate about that. And that's the fear with the EU deal. Sure, you can put enough baubles on the table to get a deal. But have you got a long-lasting, sustainable deal that actually improves the US terms of trade and makes it better for accessing Europe?